Good evening, speaking Forex. This is Gregory. It's currently 6:38 p.m. Pacific Standard Time, July 17th, 2012, and this is my analysis for the 17th and the 18th, depending on where you are. So before I get started, please understand that this video is for educational purposes only, and if you do not accept the fact that this is for educational purposes, then please do not watch this video. And on that note, let's get started. So I want to briefly discuss the trade that we were in yesterday, which was the British pound US dollar. We were on a 4-hour chart. So initially, when I got in at 56.50, I had my targets set on 5,500. And let me tell you why. I actually had to make some adjustments, and that's what trading is all about, being able to make adjustments as the conditions change. And I decided to actually bring up my targets, and let's discuss that. So remember yesterday we were talking about the uptrend wall, which was in green, the downtrend wall, which was in blue, the intersection of the trend wall, and also the confluence and convergence of all kinds of stuff in this area, which made this a really good selling opportunity, pretty much low risk. And honestly, I believe that the market was going to turn on a dime, and the next day was going to start somewhere around here. And I really felt that the market had the ability to come down to around 5,500. But I did not get my way. The market actually came up a little bit higher, about 20 pips against me, which is no big deal because remember, I placed my stop at the 89% retracement area. It didn't quite get there. It was about 5 pips away. Let me draw that on the screen. And if you didn't see the video, I urge you to go back and look at it because the information was really good. And because remember I was talking about placing my stop above the 89%. So I did that, and actually for the new trading day, the pivot area actually coincided perfectly with 89%. So I placed my stop a little bit above that, just for a little buffer, just in case. Usually 8 to 10 pips is pretty safe, but depends on the trader. Depends on your risk to reward and all that good stuff. So we missed. It missed my stop by a pretty good margin, so I was pretty safe. I really didn't have anything to worry about from that aspect. So, because I got in at the 79%, and I felt that the 89% would have been strong enough to protect my equity in the trade. So the market reversed. Now, when the market came up about 20 pips or so from my entry, they actually changed things because now, when it comes to the average daily range, the average daily range will actually complete higher than the 5,500. And I thought that once we broke the 5580 that we would have had the momentum to carry us down to the 5500. But since we started a little higher than what I anticipated, I knew that the average daily range was going to actually cause price, the momentum to actually wane once we got to this resistance, the support area. And so what I decided to do, because I had two positions at 5650, I liquidated one at 55.80 and I liquidated the other at 55.55. I actually caught the bottom of this particular move, and when I woke up, I was already taken out of their trade. So I was pretty excited about that. I was like, wow, I don't even have to adjust anything. Everything's already, the market did all the work for me. So that's pretty good. So that was that's about 70 pips, and the other one was 95 pips. So I had a pretty good trading day, 165 pips total. So, yeah, so anyway, I want to get back to the adjustment. So the reason why I did that was because now I just felt that the market was going to pull back a little bit, and I thought that maybe the market may try to come down again. But right now, I really don't feel that this is a good selling opportunity anymore. So I decided to pass on it, so I'm already out of my trades. And if I see something, then I'll jump on it. But for the short term, I think I'm gonna sit on the side because I think I see an easier trade setup. And let me get into that. So as far as the British pound, it can continue coming down, but right now I don't think I'm going to play it too aggressively because I see another easier trade setup that I can actually monitor and manage in an easier fashion. And what is that trade? That trade is the Aussie yen. So what do we have here? Well, same thing. We have a downtrend wall. We also have a unique situation. Well, it's not unique, but we have a situation that actually presents a pretty good opportunity. we have equal waves here, and I love it when you have equal waves that converge around support or resistance, because it gives you a really good opportunity to sell or buy with relatively low risk. Now this is an 89% retracement of this particular this particular wave. Okay, so the 89% in it itself usually, even if it holds just for a little while, it does represent some type of stall majority of the time. So 8160, my entry is at 8160, and my target is actually this trend line. And I'm anticipating that this trend line, that price is going to come down to the trend line and the intersection of this downward slope here, which is at 80.88. And I love my convergence areas, and another level that's really that jumps out at me at 80.90 is a pivot area. So you're starting to see where I'm going here. So we got the pivots lining up. We have this this downward median slope that's part of this regressional trend wall, and we also have this trend line that's going up. And it seems like everything is converging around this area. Now, so I'm willing to risk 30 pips on this play. If it doesn't pan out, if I get stopped out, that's okay, because I'm only going to risk 30 pips. My target at 80.90 is 70 pips away. Well, I'm actually going for 80.95 because I want to give a little buffer there. And more conservative traders may go for 8100 because that's it's a round number. But I think it's pretty safe to try to squeeze out a few more pips. But 8100 is fine as well. So actually, let's just focus on 8100 for educational purposes only. So now we're risking 30 pips to make 60 pips, which is actually a 2-to-1 reward to risk ratio. Okay, so that's the way we want to trade. We want to put ourselves in a position where we're going to make more money than we lose, and actually win more often than we lose. So we only have to be right 33% of the time in order to break even. So 50, 60, 70% of the time we're making money. All right, so we have a convergence right here. We have 89%. We have wave 1 equals wave 2. We have this this trend line, this upward trend line. We expect price to come back and meet this trend line throughout the day. The average daily range is actually greater than a particular move, so that's a good sign if this is the top here. So we have all of these areas converging at this 80-90 area, or let's say 8100 just to be safe. So we're in a high equity situation where we can only risk 30. Now we have this this resistance area, so we have support that turned into resistance. So if the market tries to shake us out, we can use this as a buffer. So I'm going to place my stop around 81.93, something like that, because that's another pivot area as well. So I'm going to use this as my protection, and I'm going to target 80.90, between 80.90 and 8100 for this particular trade. So I hope this trade made sense. It's pretty straightforward, nothing too complicated, but this is a counter trend trade, and so it takes a little more skill, and it definitely takes risk management. So I just wanted to share this particular trade with you. So let's see how it plays out. We're going to watch it over the next day or so, and if I get stopped out, I don't mind talking about that, because we will lose some trades. But if you've seen any of my other videos, we talked about it. But majority of times we're pretty accurate, and we're making money more often than we're losing. So yeah, definitely monitor this, and we'll talk about this tomorrow or later this week. All right, guys, thanks for tuning in. This is Gregory here. So I'm about to sign out, and until the next video, happy trades. And if you have any questions or positive feedback or anything like that, I'm definitely open for it. So take care, guys, and until next time, happy trades.